Hi everyone. So this is my video on Bitcoin and cryptocurrencies in general, and specifically on investing in Bitcoin and crypto, and whether you should do it or shouldn't do it, and how you should go about doing it. And for this video, I'd actually put up um, I'd ask people for questions on my various social media handles, accounts, whatever they're called, LinkedIn, Instagram, Facebook, etc. And I got quite a bit. So what I've done is um, so I've clumped together questions of different categories. All right. So the first question, and one that you can expect to pop up first, um, is whether you should invest in Bitcoin and crypto at all or not. So first, as a disclaimer, nothing in this video should be taken as financial advice. Please do your own research and speak to a sort of an expert or a professional about your specific case before you take any action. Right. So should you invest in crypto or not? I'd say, okay, so the general answer is we should have some of our money in crypto, and most of that should be in Bitcoin. Now, that's just how I would go about it. Doesn't mean that's right for you, but it's a definite yes for me. So the reason that you want to be invested in Bitcoin specifically and also crypto generally is, well, a couple of things. As Bitcoin and crypto as an ecosystem sort of matures and comes into full view, what's happening is it's acting a little bit like gold used to, or gold still does, but it's playing a similar sort of role in the investment ecosystem that gold does. Uh, just as people rush to gold often when, let's say, there's fear of inflation or the dollar's being devalued, or as global sovereign debt increases, uh, just general skepticism about the establishment financial system, so to speak. There's often a flight to crypto, and we're seeing more of that happening. And this is also being helped by the fact that crypto is gaining institutional acceptance. Not just acceptance, but a lot of institutions are moving in to invest in them as assets. So in the same way that you have institutions that invest in stocks, bonds, gold, commodities, and various other alternative assets, crypto has now become an alternative asset. And it's not really a question of whether, you know, large institutions are thinking about or should think about crypto, but it's only a question of how they're going to get in. And in fact, a bunch of institutional investors have already begun their entry. And so there's a wall of money really waiting to get into crypto. And the reason that we hadn't seen that in 2017 was it was still as yet too much of a novelty. There wasn't much known about it as yet. It was, you can compare it to a stock that hadn't been listed on a public exchange. There was just, there was not enough compliance, not enough eyeballs on it, not enough regulation behind it, and just not enough press that covered it. And so the full, there wasn't much light on it. But now as more light gets shown on it, as it gets more acceptance in the financial markets, as more institutions adopt it, by adopt we mean just as more institutions invest in it, the price of Bitcoin is bound to increase year on year. Although there will of course be volatility or falls or even crashes every now and then. And crashes are not something that are specific to Bitcoin or crypto, but they happen in every asset class. And so you should really think of Bitcoin and crypto as another asset class that you want to be invested in. Now, all this is under the proviso that you're investing for the long term. I don't know what's going to happen to Bitcoin in 6 months. I don't know what's going to happen to it in a year, and I honestly don't care. So I'm only concerned with what is going to be like 5 years from now, 10 years from now, and I think it's going to be worth much more than what it currently is. And that's the difference, as I usually say, between investing and trading. In trading, we take a short-term approach, which again I'm not interested in. In investing, you're looking to invest your money in an asset class or an asset like Bitcoin, crypto, stocks, bonds, real estate, and you're hoping to participate in the rise of that asset, the price of that asset. The second question is how much should you invest in it? Now, these two go hand in hand. And although not a lot of people think of it as going hand in hand, uh, to me, I always insist for myself and for the people that I speak to that they think of it this way, which is that think of it as a percentage of your overall investments. So it should be just one of the many asset classes that you're invested in. So what are the different asset classes you invest in? Stocks being the obvious one, whether that's directly or through ETFs or through mutual funds, doesn't matter. So stocks or equity would be one asset class. Then you have bonds or debt. So those can be, sovereign or government bonds, corporate bonds. Uh, then the third asset class would be commodities. So gold, silver, these are types of commodities. A fourth asset class would be real estate. Now you could be invested in real estate directly as buying property, or you could invest in it through REITs, which I'm a fan of. So crypto and Bitcoin just becomes your one more asset class that you're invested in. So think of it as your fourth or your fifth asset class, which means that no, you shouldn't put all your money in Bitcoin or crypto, and at least I wouldn't. There are a lot of people who want to do that and do that. It's just I'm not comfortable with that. I'm a diversification type of investor. So I always want to make sure that I've got my eggs in various baskets because I don't pretend that I'm smart enough to know what's going to happen in the future. So I don't want to bet all my money on my own way of thinking. So diversify in different asset classes, crypto being one of them. Now, because it is an emerging asset class and because it isn't as tightly regulated as the others, some of the others, you want to make sure, at least in my mind, that you don't have more than, if you're adventurous, you don't have more than a 5 to 10% allocation to Bitcoin and crypto. Now, 10% is on the absolute higher side. Personally, I would not, at this stage, I would be comfortable with five. That's just speaking for myself. Five, I can see myself pushing it to 10%, but I wouldn't want more than that. I'm comfortable participating in the potential upside with just 5% or so of a portfolio, and you know it's okay. I'll take what 5% gives me. It just gives you the satisfaction of being exposed to or having exposure to a certain asset class that can do well, and you don't want to miss out on it. I know that a lot of younger investors think of putting all their money in crypto. And I do know, based on another social media poll I ran, that a bunch of young investors think that crypto and Bitcoin should be the primary investment of a young person. I don't think so. Just because there's this thing called stocks or equities, which is ownership in companies that are meant to make profits and distribute those profits to shareholders and investors like us. So it's made for that. It's geared for that. That's what you want to put it in, most of your money in. Crypto becomes one small allocation within that overall pie, investment pie. Now the question is, how long should you invest for? Again, this is one of those first questions that always comes up especially with first-time investors. And I always say have at least a 5-year horizon for being exposed to that asset class. So if you're investing in Bitcoin, hold it for at least 5 years. And I have a longer than 5-year horizon. I understand not everybody can. So if you don't and you can't afford to have that time horizon, don't risk your money. Just keep it safe somewhere. um, so 5 years is the minimum that I'm willing to talk about. So if you have a 5-year time horizon, then it's simple. You just want to look at the top couple of cryptocurrencies. Right now, it's Bitcoin and Ethereum. Ripple's XRP has just come under massive stress because of the SEC lawsuit against them. So Bitcoin and Ethereum. So the way I do it is most of most of the allocation should be to Bitcoin and then a little bit to Ethereum. So maybe like a 70-30 or an 80-20%. I'm willing to see the value of Bitcoin go to half as I have. I'm willing to see the value of Ethereum, drop by 60%. That's fine because I think that it'll be higher in the long term. Okay, so what are your Bitcoin investment strategies? Now, this is where I always keep it simple. And so since I'm saying don't trade crypto, so you really want to just use a buy and hold strategy, in my opinion, which is just get in at any price points that you can. I think it's still early days in the crypto sort of story, and so you don't want to think too much about whether it's the right time or the wrong time to buy. You just want to get in at different price points, dollar cost average or price cost average, as they say, which means that if you can automate your purchases, that's great. So if you can buy some every week or every month, or the way that you want to set it up, depending on how you're buying it, you may be able to do this. um, and if you've not automated it, then just make sure that you're buying whenever there are crashes or whenever there are dips. And honestly, I would not be too scared to invest even at the highs as we are right now. as long as you have the 5 year plus horizon, and as long as you can afford to, you're mentally sort of prepared to see that money half. Of course, keep in mind that it can completely disappear and you can be left with nothing, okay, which is why the minimal allocation. The next bunch of questions is to do with the volatility or the movements or the risk associated with investing in crypto. Now, keep in mind, like any investment asset class, cryptocurrency is risky and it has inherent risks. And over and above the usual investment risks, it has further risks because it is still new. And as with any emerging asset class, there are unknown risks that you're going to face, which basically means there are things that are going to happen which we don't know are going to happen. And as they happen, the prices are going to go up and they're going to go down. And there's no way we can predict exactly what those triggers are going to be. So if you are someone who can't take that volatility or price movements or price shocks, then stay out of it. Don't bother investing. So how do you think of volatility in Bitcoin or crypto? Um, Firstly, if you think of how much Bitcoin has moved over the past year, it's about 200% gain, I think. I may be wrong, but it's about a 200% gain over the year, which means that's quite a bit. But you can't measure volatility alone in isolation. You need to measure it in relation to something else. So how risky is it, or how much does it move in relation to other assets? So if you think about Tesla, which is one of the best performing stocks of the year, Tesla is up about 600% for the year. Okay, 600%, and that's one of the large companies, our largest companies in the world. So when you think of it in those in comparison to something else, suddenly it doesn't seem completely in its own sort of universe. You do have comparisons that you can make with it. The reason people think of Bitcoin and Ethereum and other cryptocurrencies as extremely volatile is because they think of it from its inception when it was worth nothing. The way to draw a parallel between investing in crypto, let's say in Bitcoin 10 years ago, and holding it to date is not like investing in a stock on the public exchange 10 years ago, let's say like Amazon and holding it to date, or a Reliance and holding it to date. It's rather like investing in Amazon as a seed investor and holding it to date. Because 10 years ago, Bitcoin was nowhere to be seen. It had just been developed. It was not worth anything really. And it was unknown. It was not on any public exchange. There was no way of sort of transparent price discovery. In the same way that very early stage private companies also are difficult to value. There's no way to in a transparent manner discover what their fair market value or price is. And so think of an investor in like an early seed Amazon investor. They've made a lot of money by holding it from the time that it started to the time that it is to its current value. Similar to what That's how you should think of an early Bitcoin investor. And so there's a lot of risk that you take on when you invest in something at the absolute beginning, because you're gambling on something, simply put. Right? That's not the same as investing in Bitcoin today, just as it's not the same as investing in Amazon today, because today Amazon and Bitcoin are very different in many ways, but the similarity is that they're both in the public eye, which means that they're constantly tracked. Bitcoin is now a constant daily feature of a big global financial newspapers and the financial press, generally speaking. Right. So when there's a high, everybody knows there's a high. When it crashes, everybody knows it's crashed, just as there is with Amazon, Tesla, and other sort of Reliance, HDFC, or wherever you're looking at this video. And so as Bitcoin has got bigger, and especially after 2017, when it became a globally tracked asset class or asset, volatility has reduced. And you can expect to see volatility reduce gradually. That means Bitcoin prices are not going to move as wildly as they did pre 2017. There's a lot more open press that tracks it, which means there's more transparency in the Bitcoin investing process, which means that more experienced and bigger investors are coming in to participate. And with any asset class, as that happens, as institutions get involved in it, the volatility reduces. So one of the reasons that Bitcoin price movements were as wild as they were pre-2017 is because it was developed in a completely digital world, and the trading mechanisms by which people bought and sold Bitcoin had nothing to do with the legacy trading systems that were used for, let's say, bonds and stocks and other things like that. One of the sort of hallmarks of this new crypto ecosystem is that there's much less friction in the trading process. One big thing, for instance, is fractional shares. So you can buy, fractions of Bitcoin. So, Bitcoin today is at about 23,000 US dollars for one Bitcoin. So most investors are not going to buy a whole Bitcoin. Most small investors are not going to buy a whole Bitcoin. You're going to get 0.0 something of one Bitcoin, right? So that's something that enables anybody with any money to get in on the action, which is not something that you could typically do easily with stocks. It's now possible, but it wasn't something that was very prevalent a few years ago. And also, another reason Bitcoin is quite volatile and was much more volatile is that it's traded 24/7. So if you think of the stock market, it's actually a very geographically limited market. Stock market trading begins at, let's say 9:30 in the morning, ends between 3:30 and 4 in the afternoon. And so you have a cooling off period. And then, you go to sleep, and then people the next day come and put in more trades, and the entire thing starts again. So because it's a sort of a 9 to 5 sort of a process, you have a natural cooling off period, and there aren't people placing bets and buying and selling all the time 24/7. That's not the case with Bitcoin. Because crypto, so Bitcoin, Ethereum are global assets, they do trade on exchanges around the world 24/7, which means just by virtue of that, you're going to have much more price volatility. Price volatility has as much to do with the trading mechanisms and how the dynamics of that works as it has to do with the underlying asset. In fact, I would say it has much more to do with the trading dynamics than it has to do with the underlying assets. So if you suddenly make Amazon stock, let's say, a globally traded commodity, okay, quote unquote, you're going to see differences in the volatility of Amazon stock as compared to what it is right now. So that was about volatility. Then I got another question about hedging. So how do you hedge your Bitcoin or crypto exposure? Now, this is my personal opinion that you shouldn't be looking to hedge your Bitcoin or crypto exposure because your entire portfolio shouldn't be Bitcoin or crypto. Now, if you are someone who has gone that route, 100% Bitcoin, then, well, maybe this video just isn't for you, right? Because then that's a completely different conversation. But if you're someone who's allocating, say, 5%, um, anywhere from 2 to 10% to crypto or to Bitcoin, then um, you don't want to hedge that because that may be too risk averse. The fact that you're investing in crypto at all, which means that you're quite aggressive in your risk appetite. Someone who isn't aggressive shouldn't be investing in Bitcoin. So if you are quite aggressive and you're anyways putting in just between 2 to 10% in crypto, then you don't want to sort of dampen those gains by putting in hedging strategies as well. I mean, there are Bitcoin futures, and I'm sure as the years roll on, you're going to have various Ethereum and Bitcoin derivative markets, but we won't get into that. There would be hedging strategies available with those, but that'll be usually something that institutions do, because if they'll have large Bitcoin holdings, they'll want some way in which to hedge it. So how do you think about risk, and how do you mitigate risk? There are certain simple sort of investments 101 risk mitigation strategies, right? The first thing is you need to have a long time horizon. So at least a 5-year time horizon. I would think you should have at least a 10-year time horizon, but let's say 5 years is the minimum, absolute minimum, right? So have a long time horizon. Diversify your investment portfolio. So as I said, stocks, bonds, commodities, real estate, and crypto. So you're well diversified. So you always sleep well at night knowing that your entire portfolio isn't going to crash all at once. And the third risk mitigation strategy is price cost averaging, which means that buy it every week, buy it every day, buy it every month, as per what trading platform you're using. So that if the market falls, you get some. If the market increases, you get some. If the market's flat, you get some. So the first rule that I use in investing is I don't try and time or predict the movements of the market, whether it's equities, bonds, crypto, commodities, whatever it is, because I can't predict it. Neither can you, by the way. And so if neither of us can predict it, then you might as well just dollar cost average and build a position, build a long position. So it could be even building a position over a year. So buy crypto every now and then over a year, definitely buy the crashes and then hold for the long term gain. Okay, so some of the questions that I got, which were The more complicated questions were to do with the price of Bitcoin and the relation of the price to its use as a currency. Now, in fact, I think, and I'm not alone in this, but I don't think Bitcoin is going to be used as a medium of exchange in any meaningful manner over the next few years. I think it's proven itself to be, and there's no question about this now. I really don't think it's up for debate. It's proven itself to be an asset class or a store of value, and people are investing in it as a store of value. The serious money, like not you and me, right? Not some of us who are just putting in our money thinking that, oh, this is the future of the world. I don't think Bitcoin's the future of the world. I just think it's an asset class, right? So the institutional investors are putting their money in as a store of value, as just another asset class that has in fact proven itself over a decade. So I see Bitcoin as an asset that you invest in as a store of value because you think the price is going to increase in the future, because more people will want to get in on the Bitcoin story. In fact, now suppose I'm wrong. That is, if Bitcoin actually does come to be used as a currency, then there's no way that would happen if its volatility is what it is right now. Which means that when something is used as a currency, right? So think about your national currency, whether it's Indian rupees, US dollar, Canadian dollar, UK pound sterling, whatever your currency, the job of the central bank in your country is to make sure that inflation is in check, which is which is another way of saying to make sure that the value of the money does not fluctuate too much. It can't rise too much, it can't fall too much. Because if you can't trust the stability of the value of the money that you use for daily exchange, then that money is worthless. So Bitcoin as cash is pretty much useless because there's just too much volatility for a cash product. So for it to be seen as a medium of exchange, there's just too much volatility. There may be other stable coins. Stable coins are coins that are designed to be stable. They don't have the volatility of Bitcoin. They could be pegged to the US dollar, for instance. These may later come to be used as a medium of exchange, but not Bitcoin, in my opinion. And in fact, the increase in Bitcoin's price in the future, in my opinion, is not tied to its increased adoption as a medium of exchange, right? So just to reiterate that if it in fact does become a medium of exchange, then I do not think it should be invested in. So if I thought Bitcoin would be a medium of exchange, I wouldn't invest in it because I have no interest investing in cash. So would I invest all my money in my checking account or my savings account? No, because that's cash. So it's the least exciting or interesting or least growth oriented investment. The Bitcoin story is not really being driven by its adoption as cash. It's being driven by the institutional adoption of an alternative asset class based on various factors. Now, one of the stories that drives Bitcoin is its adoption in the payments ecosystem, all right? But it's becoming more a go-to crypto and more a symbol of the power of crypto or the promise of crypto than it is of the use of crypto, right? So in this sense, it's very much like gold, which is that gold is functions for investors sort of like a symbol of a non-banking monetary system, but it doesn't actually work as a monetary system. In the same way, Bitcoin is the promise or the symbol of a non-banking or supplementary monetary system of the future of some kind, but it isn't really functioning as a monetary system, right? So they hold a lot of symbolic value, and that's not to downplay it. I think symbolic value is extremely important. All right, thanks a lot for watching. Please subscribe if you haven't. That's extremely important. I'd really like these videos to get to a few people, and hopefully they can benefit from it. And this video is, of course, done solo. My trusted partner and fellow video maker Gokul is not on here. He's taking a little break. He'll be back in the new year. But that's it from me from now. Please like, share, subscribe, and comment, and let us know if you liked it. Thanks a lot. See you next time.